Marjorie Adams. I'm going to be leading the webinar again today. And as I kind of mentioned a bit ago, we are going to be talking about month-end close this time. So skipping around a little bit so that we don't just get, stuck into the reports side of things, although we will continue with some of the reports in the next sessions coming up, unless somebody really reaches out to me like they did with this month-end close process, and I will tackle it. I am not going to be in product as much today as I usually prefer to be, but I do have my QuickBooks online sample file pulled up here, right? So if you just, again, Google QuickBooks online sample file, then you can follow along with me in going through some of the things that we are doing in product in here. So I always like to do that. So again, we're going to be talking about the month-end close process. So what is this? And I feel like that there is definitely a dying art when it comes to month-end close. It used to be just, in some professions that I see right now, in some areas, we will still see a pretty well-documented month-end close, but that tends to be when they are not inside of QuickBooks. People tend to forget about it when they're in QuickBooks, unless they're working with a accounting firm or a CPA firm. And even there, sometimes we have gotten away from this formalized month-end close process. So we're just going to talk about that a little bit. I owe my knowledge of month-end close to my manager when I worked at Armanino McKenna. Tammy, she really made sure I kept all of that straight. And so even though it's been probably 20 years since I've had to do it myself, I will never forget it. I will never forget how to go through it. So let's go ahead and dive in. So these are the different steps that we talk about when we go through month-end close. We're posting our closing entries. We're going to review and reconcile our balance sheet, review comparative P&L, profit and loss, review leading indicator reports. So there's a lot of reviewing that should be happening at month-end close. Month-end close Workpapers, which I do have some screenshots to show you. Of course, I can't show you live client data with that one. We have to close the period, and then, of course, we should be sitting down and having financial review. So I thought I would ask the audience a little bit on this one first. So posting closing entries, I have a list here, but if anybody wants to pay into chat or question some of the closing entries that they have or do with their customers, that would be great. I thought I could get a little bit of engagement maybe today from people. So if you have any that you do frequently at the end of a month, please be sure to share. One of the ones, as you guys are going over to chat and sharing your knowledge with each other as well, one of the ones that we have that I have set up in the QuickBooks Online sample file is depreciation expense, right? So that is something, generally what happens with depreciation expense for people is that they're given a number to post monthly or quarterly from their CPA, right? And then at the end of the year, we will adjust to true up to whatever the total should be. So it's a rough estimate for what we think our depreciation should be for the year based on prior years. That's what we usually do. Okay. Now, of course, I could just go straight in and create a journal entry here. But for month-end close entries, most of the time they're pretty consistent. So the best thing to do is to set them up as a memorized transaction, right? So I would come into the journal entry the first time. I would put in, it doesn't really matter the date because I'm not going to post it. I could add in the accounts. So we have depreciation of the truck, right? So this is our balance sheet account, even though it's not really clear when you click this drop down here of what we're looking at. So probably that's a good indicator that we need to do some like headers and sub accounts. So you make sure you're posting to the right one, or put in depreciation expense down here. Not really great how we see those, but the depreciation right on the balance sheet should be a contra, so it should be a credit. of some kind of amount. If you have a fixed amount that you want to put in there, you can. You don't necessarily have to put in it as zero. And then the other side would be our depreciation expense account as well. Okay, so once I have this journal entry in here, I can click Make Reoccurring. I can do the template, monthly depreciation. You can make it scheduled, and have it post a certain amount of days in the future, in advance, right? So I want it to post on the 25th of the month, as an example, or 5 days before the end of the month. Most of our recurring journal entries that we do with customers, we set up as unscheduled, and we go in and we run them manually, because a lot of times the amounts aren't exactly the same, or we want to review the amounts before they're posted. That doesn't mean that you can't, once it's scheduled, doesn't mean you can't go in and edit it, but we like to try to not post things automatically unless it's actually we don't have to look at it, basically. So leaving it unscheduled would usually be what we do. So once we have it saved, right, I'm not going to save this template because I already created one before we started our webinar. But if I come up here now and I go down to my recurring transactions, then I can see all of my reoccurring transactions. And you can see I created this monthly entries one, and you can click on use. You have to pay attention to the date. So I'm posting this for 7/31, and then you can modify it as needed. All right. So some of the other ones that we see around monthly reoccurring for closing entries, so depreciation, as I just mentioned, payroll accruals, we see that a lot. So if you have payroll that's run every 2 weeks and you need to, if I look down in our dates here, right, if payroll was run on the 4th and it captured all of the time for the 17th through the 28th, that's fine, right? Posting the payroll on the it was posted on the 4th, so I'd have to back it in to make sure that it's posted during July. The other thing would be then on the payroll on the 18th, I would have to back in that 1 day of July 31st to be posted into July. So payroll accruals, making sure that your payroll expenses are hitting in the months that they are incurred, not based off of cash on the day when it is paid out to your employees, right? Other things we see, amortization of prepaids. So if you prepay for a subscription and you pay $12,000 for the subscription in January, you need to expense 1 month's worth of that subscription every month throughout the year. So you would see that amortization happening. Okay. A lot of times on those ones, we will set those up to be automatic and then have a start date and an end date, right? Because they are a fixed amount of time. And I don't really need to pay attention to those because it's fixed. We have overhead to department allocations. So if you have, a sales department, a marketing department, a operations department, project department, warranty department, whatever it is, and you want to make sure that each department equally is allocated some overhead type of expenses. So like the accounting department, right, doesn't have a revenue source. So the service department and the wholesale department do, they have to take a piece of the accounting department each type thing. So some people do that based on employee headcount by department. Some people do that based off of revenue, splitting that out. We also have balance equity accounts. So when we're looking in at our balance sheet, we want to make sure that if you have multiple owners in the company and they're 50-50 owners, that at the end of the month, their equity accounts are balanced. And we have either a note payable, a note receivable, whatever we're going to do with the offset. Okay, so there's just some examples of closing entries. Going back to our slide deck here, the next thing that we're going to be doing is reviewing and reconciling our balance sheet. And that is the most fun part for me. This is my most fun. For accountants who like everything to be reconciled down to the penny, the balance sheet reconciliation is the most fun. One of the things that we always talk about here at Fourlane is that if your balance sheet is correct, your financials are correct, right? So if there's nothing hiding in your balance sheet, then your P&L is right. Now, on the P&L, they might not be in the right buckets per se, right? We might have put it in other expenses instead of cost of goods sold, but the bottom line number is correct if the balance sheet is correct, because the two tie out to each other, right? So when we come in and we start to review our balance sheet, the first thing that we want to do is make sure that we're looking at the correct period, so through the previous month generally. And of course, we'll go through, I usually start at the very top, we'll go through and we'll reconcile the checking account. Everybody hopefully knows how to do a bank reconciliation, but we can touch on that if we need to. We did some bank reconciliation troubleshooting a couple weeks ago. So we make sure that the bank is reconciled, and then potentially what we'll do is we'll go in and look at the checking report and see any unclear transactions, right? So I would go into my previous reconciliation report, look at any unclear transactions and see if there are any transactions that I need to write off potentially. See if there's any duplicate transactions in there. Right? So it's not just reconciling the bank account. That is not enough. You have to go back and look at the report and see what is incorrect in there. And we did some of that again on some of the previous webinars. So that would be for the bank account. So we go bank account, it's reconciled. Yes, I'm going to review the unclear transactions up to July 31st, because that's all I care about. If it's posted in September of 2023, I'll catch it in September. Then I go through and look at the AR aging report. So with these ones, what you want to do is you want to look at the subledger reports. So I would be coming in here into my reports, and I would be running the accounts receivable aging summary report. And again, just doing a review, right? So I want to make sure first and foremost, whenever I look at these reports, that it is for the same period. So the very first thing we do is we look at the balance sheet. It says 495752, and then I look at the AR aging, and it says 495752. If you ever, every accounting staff person makes that mistake where they come in, because in QuickBooks, 98% of the time, your accounts receivable aging and your accounts payable aging are going to tie to the balance sheet, right? Because QuickBooks is different than a lot of other softwares in that it doesn't have true subledgers for accounts receivable, the way like an Acumatica or you know, Sage 300 or, you know, Dynamics will have, right? They have true separate AR aging ledgers. QuickBooks just has one general ledger. Everything else is just reports based off of one general ledger. So it's very, very difficult to get these two things to not tie out. It does happen though. And everyone, whenever they're used to using QuickBooks, they will go in and they'll be like, oh, balance sheet 4957, and then they will, you know, have the date incorrect at August 10th, and they'll look at it and they'll go, well, this isn't a great example because it still ties out. But they'll go, oh my gosh, they don't tie out. I've got data corruption. What's happening? And your first thing has to be, and it took me a long time to make this my first thing. My first thing has to be, oh, go check the dates. Okay. Make sure we have the dates correct whenever we're looking and reviewing these subledger reports. And then we also have to do a quick one-over of the data, right? So the first thing, look at over 90 days. Maybe look at over 60 days and 90 days. If those numbers have a lot of dollars in it, we need to go see what's going on, right? This is the time when we do month-end close, this is the time to go into what we call here at Fourlane inquisition mode. You need to ask, like you need to say, this looks weird, I need to look at it. Okay, so looking at those that are way outstanding. The other thing that you want to review quickly is just for any accounts that have a 0. Now this one has a 0 because it's a header and a job probably. So like it's saying Shara has a 0, but Barnett Design, which is under Shara, has an amount. But if I look up here at Amy's Bird Sanctuary, it has a $0 amount and it's not coming from one of our sub projects. So I would be wanting to dive into that and see what is happening. So we have a credit memo and an invoice. They're not applied to each other, and I would need to go in and apply them to each other to get it fixed, right? So again, because when we go in and we do our month-end close work papers, which we're going to talk about here in a second, we do not want to have junk reflected, right? And that Amy's bird sanctuary credit memo not applied to an invoice, that is stuff that I should be able to clean up prior to submitting this over to leadership, okay? And the reason why for that is because when I look at this, or when you know, leadership looks at the summary report, let's say when they're looking through the month-end close work papers, and they go, why is Amy's bird sanctuary? Because they won't even look at the amount. The first thing they'll do is go down the left column. And they'll be like, why is Amy's bird sanctuary on here? We shouldn't be doing any work with them. Why are they on our receivables report? I thought they paid. So it's taking them away, taking their energy away from what we want them to be paying attention to. What I really want them to pay attention to is go get the money from Paulson's, right? So I need to make sure to remove things that I don't want leadership to be paying attention to. Okay, continuing to go down the balance sheet. So inventory has an inventory subledger report, right? Inventory valuation summary. Undeposited funds should never really have a balance in it per se at month end. I mean, it can have a balance in it, but it's infrequent that it should have a balance in there. So it's good to go in and look at what is not deposited. So you go into banking, make deposits, and see what's sitting in there as outstanding. And if nothing shows up, then we have to go figure it out, right? We can't just leave a balance sitting in there if we don't know what it is. We have our depreciation that we just posted. We have our truck expenses. Well, I must have made a mistake on this. Let me move the date out because I did post. There we go, furniture. I must have posted in August. Okay, so I posted furniture. So one of the things too, when you're reviewing your balance sheet, is to look through fixed assets. People hide in fixed assets. Every month we should go into fixed assets and we should dig in and look at what happened during that month, right? So you can change the date. What happened during that month and should it be there? Okay, so they have a fixed asset threshold of what can be expensed and what needs to be amortized. $150 table should not be expensed, I don't think, in any business. And so I would click into this and move it over to the P&L during my review. Okay, they have a computer that was $5,000, definitely should be amortized. A couch, $1,300. It depends on their fixed asset threshold, but lamps, they got 5, and it was a total of $1,000. That is something that we'd have to make sure that we have an understanding, but I mean, $200 each of a lamp probably can be expensive, right? So we want to review those accounts. Oh, QuickBooks wants my experience. And then, so we're going to continue on down, run our AP subledger report, look at the MasterCard reconciliation, and look at what is unreconciled, right? Look at the unclear transactions. Make sure that we have substantiation for Board of Equalization payable. So this would be, my expectation would be, it would be your sales tax liability report. If we have loan payable, again, we should have some kind of documentation around this loan payable. Hopefully we have something from our bank, like a bank statement. And then note payable, maybe some kind of contract for when this is supposed to go down or substantiating this balance, okay? But every month, we need to look at every balance. There should be no skipping. 25,000, gonna go look at the documentation. Yep, it stays at 25,000 until September, and then we're gonna pay out 15,000 of it. Cool, move on. Every month, you should need to go through that checklist, okay? Then we have review comparative P&L. So we have talked about this in previous webinars as well, but that should be pretty straightforward. We go in, we run our profit and loss statement, and we look for trends, right? So if I run it through 7/31, what I'm doing is I'm looking for outlier trends, right? So I'm saying, okay, we have $131 in, well, here we go, $391 in revenue, 365, 1,000, 1,500, 6,500. That's quite a big jump. Why, right? Why did that happen? That's quite a big jump. And so maybe I want to dive in and look at, make sure that all the revenue is posting correctly, that I didn't post some revenue for August in here or from June into July. So we'd want to look at why. Same with having cost of goods sold, we have none, and then they start in July, maybe why. If we have a depreciation expense, right, and it's $500, $500, $500, and then it shows $2,000, why? I mean, miscellaneous should never be on a P&L, so I would be diving into that, why, right, and making sure that we put it to something that's not miscellaneous. Okay. The other thing I have in here is reviewing leading indicator reports. So reviewing balance sheet and P&L are good, but there should be some other things that come up. So things like running your job profitability reports, running like a profit and loss by item type thing, running a sales by item report maybe, or sales by customer report. There should be some other reports that you can review quickly just to help you from a high level, right, without having to look at every single transaction, see, yes, this information is looking correct. Okay. All right, so then we go into month-end close work paper. So this is the thing that I was mentioning that's kind of like a dying breed, I feel like, but we do it here at Fourlane, and I think it's very important. So I wanted to show you guys, make sure you all are aware of the how-to on these things. So I have some actual client stuff in here, but I have it all blocked off. So what we do when we're talking about work papers is we take the balance sheet and we add in substantiation for every amount that is on that balance sheet. And we literally cross-reference to where that goes. So here is my balance sheet. Here is my amount that is sitting in my operating account. And I am saying I am cross-referencing to another page down in my month-end close work papers. That is C1.1. Now, back when I worked at Armanino, we did this by hand and printing out papers. Fourlane has been a remote firm since 2009, and so we have always used Adobe Editor to do these kinds of things. So we come in, I see the 35971.76. What I'm looking for is where in my account, in my bank reconciliation is that amount, right? And so in my bank reconciliation now, I can come down to my ending balance as of the end of the time period, and I see that exact same amount, and I'm referencing it back. This ties out to a 2.1, right? So every page has a letter on the bottom and some numbers on the bottom in order to tie pages together, multiple pages together. Okay. So on the bottom of this balance sheet page, it would say a 2.1. Then the next one, to make sure, because we're saying, okay, the balance sheet ties to the reconciliation report. Now also, the bank statement needs to tie to the reconciliation report, right? So we have this 809, because it should not be a thing, right, that your balance sheet and your bank statement are exactly matching at the end of the period. That's not normal. That's not very normal, unless it's like a savings account or something like that, maybe. But for an operating account, for sure, not normal. Because you've written a check and it hasn't cleared yet, right? Type thing. So in here you can see I have my current balance in the cash account, 809,181. That's what the bank says. And then I tie that back also, right, to my reconciliation. Okay, so cross-referencing so that everything is substantiated. Here's some examples of uncleared, right? Uncleared checks. This is in 2019. I have an uncleared check from 2017. It might be time to write that off. An example in the accounts receivable space. So here we're looking at AR aging, right, from the balance sheet. It has a total of 1.8 million. And then I run my AR aging subledger report, which also has a subtotal of 1.8 million, and I cross-reference the two together. So of course, what you'd be having there is you'd be having your balance sheet on top, your P&L right behind it, and then you just start going through with all the substantiation documents that you need to get you through that balance sheet. Okay. Capturing all these I'm going back up to the top here. Capturing all these work papers are also super important because, as we know, things change in files. And we can't always control that. And we can always go back and reference our work papers if we need to. All right, so once those work papers are done, and actually just to, I know this is kind of a little bit off, but to post a closing entry for overhead allocations, a lot of times we don't post that closing entry until we've done these other things, right? Because we want to make sure that all of these other things are correct before posting that entry. So some posting entries can happen at the very start, and then some happen after, like work papers or right before work papers are being completed. Okay. Then the next thing that we always want to do is we want to go in and close the books. In QuickBooks, this is a little different than in some other softwares, right? But it works just fine. So you go into your accountant settings, you go into the advanced here, and you edit, close the books and turn that on. You set your closing date. So I'm going to close as of July 31st. And then they have two options in here: allow changes after viewing a warning. I wish they would take that away. Because a warning, no one listens to any pop-up in QuickBooks hardly, right? Like people just click, how do I get out of it? How do I get rid of it? So always allow for changes after viewing a warning and entering a password, right? Because even for myself, even for me, when I'm going through and doing my day-to-day activities, I see a pop-up, I'm like, bypass it. But if I have to put in a password, then I am acknowledging, even if it's just me running my books, I am acknowledging that this is, like I know I'm posting to a period that I have already done all the work papers for it. And hopefully it'll stop you from doing it, right? Okay, and then the last step after we've closed out all the periods is to do financial review. So we usually have some month-end reporting packages, right? So we'll have a balance sheet, P&L, and then we'll have some of these KPI reports, other reports that we use. And we'll put that package together. We will create the story for leadership, right? Tell them the story of what happened during this month for this company, and sit down and review it with them. Now, most of the time, everything is finalized up to here, and the review with leadership is just review. But there can be times when you sit down with leadership and they say, that's not right, that doesn't look right, and then you have to go back. And that could be a lot of work to redo those work papers, but at least we know our numbers are good. I will see you guys next week. Thanks, everybody.